How much gold do you have in your investment portfolio? More importantly, how much of the gold component of your investment constitutes sovereign gold bonds or SGBs? Sovereign gold bonds have provided steady returns to investors over the years. But the sudden dip in gold prices post-Budget 2024 has left investors facing lower than anticipated redemption values. This Tuesday, as part of Union Budget 2024, the Finance Minister slashed import duties on gold and silver from 15% to as low as 6%. The unexpected tax cut led to a substantial drop in gold prices on the Multi-Commodity Exchange MCX, with prices plummeting by more than 4,000 rupees to 68,900 rupees. Gold prices stood at 71,755 rupees on Tuesday. On Friday, they dropped further to 70,265 rupees per 10 grams, a drop of over 2% in just 3 days. SGB prices saw a decline on the National Stock Exchange as well by 2 to 5%. As the value of sovereign gold bonds is closely connected to the price of gold on the international markets, your investment in SGBs results in a capital loss on your initial investment if the price of gold comes down to the price of gold at which you bought the bond. The calculation of interest on SGBs is based on the current market price of gold. SGB holders get interest payments credited biannually to their accounts. Therefore, if the prices fall, interest rates go down. When prices fall drastically, interest rates go down huge as well. Investors who participated in the Sovereign Gold Bond Scheme 2016-17 Series 1 issued on the 5th of August 2016 are nearing their final redemption, which is set for the first week of August 2024. Unfortunately, the recent cut in custom duty on gold may put a damper on their returns. The original issue price of Sovereign Gold Bond 2016-17 Series 1 was 3,119 rupees with an annual interest rate of 2.75%, paid in a semi-annual installment basis. The final installment, along with the principal, is due upon maturity next month. You get around 10-11% return with mutual funds at a risk. With SGBs, there is no risk. The scheme was attractive more before the tax cut. The question on the minds of investors is whether the government will discontinue sovereign gold bonds altogether. There hasn't been an issue of sovereign gold bonds since February this year. On the collection side, after accounting for redemptions, the net issuance of sovereign gold bonds are now estimated at 15,000 crore rupees for this fiscal year, a significant decrease from the 26,138 crore rupees projected in the interim budget and 25,354 crore rupees in the revised estimate for 2023-24. In the long run, the prices of gold only move in one direction, up. This fall may just be a little exception to the general rule. Long-term gold investors may really have nothing to worry about. Maybe a little more physical gold instead of paper, so you control when you want to cash out and how long you want to hold without compulsion of a lock-in period.